before we start with the panel discussions, we would like the audience to share as much feedback as possible on discussions on our social media using the hashtag FEIFC. The first post-lunch panel we have for you is Reimagining Financial Inclusion for Women. In India, in 2021, as per industry reports, 42% of women had an inactive savings account compared to only 30% of men. The difference of 12 percentage points is much higher than the global average of 5 percentage point gap. This is because low-income women continue to save informally, which translates into other pain points. Given that women are natural savers, how do we encourage them to save in the formal financial space? A pertinent question here is also why low-income groups and rural women feel reluctant to come to banks. The answer is perhaps multifold. To get deeper into the conversation around financial inclusion for women, I would like to first invite Ms. Chetna Sinha, founder and chair, Mann Deshi Bank and Mann Deshi Foundation. Ms. Sinha passionately believes that empowering rural women transforms and fuels growth in an economy. In 1997, she set up the Mann Deshi Mahila Sahakari Bank, India's first bank for and by rural women. Today, Mann Deshi Bank has loaned over 780 million and regularly creates new financial products to support the needs of female micro-entrepreneurs. Can we please have you up on the stage, ma'am? Next we have with us is Geeta Goel, Country Director India, Michael and Susan Dell Foundation. Geeta manages the foundation's operations in India to transform the lives of urban low-income communities through improved education, livelihoods, and financial inclusion. Leveraging a suite of funding tools, grants, contracts, and program-related investments, the foundation has committed over $300 million in India, anchored around the core thesis of impact, scale, and sustainability. Please join me in welcoming her up on stage. May I now invite Neha Juneja, co-founder and CEO, India P2P, a fintech platform that creates high-yield investment products out of loans given to women and small business owners. Neha is a seasoned entrepreneur, having previously co-founded and scaled Greenway, which is one of India's largest clean cooking enterprise spread across rural India and sub-Saharan Africa, where she developed multiple credit partnerships focused on women as borrowers. Let's have her. Joining them is Mr. Prabhat Labh, CEO of Grameen Foundation India. Prabhat is an international development leader with over 25 years of experience. He has designed and led agriculture, financial inclusion, and women's economic empowerment initiatives across Asia, Africa, and North America. Prabhat also co-founded Grameen Impact Ventures, a tech-enabled social business for scaling Grameen's work, and also acts as the CEO of Grameen Foundation for Social Impact, a not-for-profit subsidiary of Grameen Foundation India. Let's welcome him. Next, we have Ms. Shweta Aprameya, founder and CEO, ARTH. At ARTH, she is focused on building an impact-focused micro MSME fintech company with the idea of rethinking the future of credit for nano and small businesses in India and moving the needle from a passive financier to an active, transformative finance partner. Besides being an entrepreneur, Shweta is also an advisor and seed funder to early-stage social impact ventures. Let's welcome her as well. And the discussion will be moderated by Sonal Khetarpal, editor, SMEs, Financial Express Digital. Let's welcome all our panelists up on the stage.
Thanks, Vibha, for setting up the context and introducing the panel and the panelists. So we've all heard a lot about financial inclusion, and we know that we can say now that India is a success story for financial inclusion. We have created access, but now we need to work on the usage part of it. We have 46.3 crore Jan Dhan accounts already, out of which 56% of them are owned by women. But it is also seen that women, while they have the accounts, they use it only to access welfare schemes most of the time. So how do we work on increasing usage to further their financial inclusion? So they also use formal mechanisms to save, to invest, to buy insurance and pension. So Chetna, I would like to start with you, since you lead a foundation, a bank, and also a skilling school for women, rural women specifically. Please share some of the innovations on what were some of the problem areas you saw in the financial services sector and you started this journey from a foundation to a bank.
So actually, my journey has started from bank to foundation, though. But yeah, I mean, I would just like to share not just challenges, but the lessons I learned from women, particularly. You know, and this time when we have, like, I may say, 30-40 billion dollar industry in microcredit. So then what are the challenges, right, in that way? And I'll narrate an experience of one of our women who was vending on the street, Parvati. And she said that, and also using, I mean, she actually wanted to buy a cell phone. She came to a bank, and so we said that you can buy cell phone as a feature phone, which would be very cheaper. And she said, no, I want to buy a smartphone. Why smartphone? Because everything after COVID for children's education and all. So she bought smartphone, and when she wanted to get access to bigger loan, our bank Sakhi, we have a bank Sakhis also. So our bank Sakhi said that maybe you should form a group so that you will get the loan. And she said, no, I want individual loan. And then, so individual loan, I mean, I'm talking about our bank, right? Mann Deshi bank. I'm not talking about the commercial bank who is going to tell her that, no, you need to have collateral. But still, what I'm trying to say is that even as a banker, what are the fears in the banker? So then our credit officer said that, no, she has to first prove herself. She's a first-time borrower, take a group loan in a group, and then repay it, and then she will get the individual loan. But you know what she said? She said, I'm doing digital banking. I have a digital transaction. I can show you my daily sales and daily income. You can see my working capital. Why can't you decide on that how much loan I can get it? Right? So that was the thing which I felt that she was telling us. Number one, that why do you need a credit score of my, right? Because she's a first-time borrower, and we are saying, no individual, group. So, and peer pressure will work. So then, number one, she is actually proving that I have a digital transaction on my working capital. You give me loan. That is number one, she said. And then she's saying, you have to give me loan, but I will repay daily. So help me in that also, which clearly indicates that when you talk about financial inclusion, and if you want that it is not just access to finance, but control on finance, then we had to design the product in such a way that she can get, which is in the Jandan also, overdraft facility, doing digital transaction, not requiring a credit score, because the transaction trajectory itself can be a de-risking part of, giving a loan, de-risking to the lender. So with that, what we learned from our women is that, and then third part, that about is that she will, if she gets individual loan also, she may not have collateral. And so then we thought, how do we build their alternative collateral also? And I'm not talking about credit guarantee fund or something, but creating an asset registry of women, digital asset registry. And how you can do is, she would have chickens, she would have goats, she would have animals, she would have other assets also. She may not like to disclose gold, but she would have those. So why can't we, for credit score, have an alternative credit score? For collateral, we can have an alternative asset registry. These are the ways where you include them, and so that your accounts will not be dormant. It's not just access, but it's control. And then she will spend, she will manage her finance, she will do digital transaction, and at the same time, she will have her own data of her own asset, where she can say that this is my net worth. Right? So I think these are the ways where you can work. And I always say that when we are, I mean, as a banker, we have learned more smart things by doing banking with poor women, because they are smart. So they will make sure that you also become a smart banker. Thank you.
Thanks. That was a very inspiring opening, conversation, a starter for this discussion. Thanks, Chetna. So from here, Geeta, I would actually take the conversation to you because I know that Michael and Susan Dell Foundation did some studies and has some very interesting data points to share on financial inclusion and women.
So yeah, we did a study last year with Women's World Banking and Bank of Baroda. So I think moving from the cooperative bank to the mainstream banks, with a real focus on saying we picked up I think 100 branches of Bank of Baroda across the 4 metro cities to say can we double click on the women-owned Jan Dhan accounts and why the activity rates are low in that. And what would really trigger more activity, more savings. Because if you drill the data, women who were regularly saving, we saw that their savings balances were actually almost 30% higher than counterpart male Jan Dhan accounts. The challenge was that most of women's accounts were more dormant, like the dormancy level in women's account was higher. And I would say several things emerged from that study, but I mean, just feedback from the women clients were many were not even aware of the overdraft facility, or that if you regularly saved, there could be some benefits coming out of it. Several, I think more than 80% not welcome at a bank branch. Not even entertained by the business correspondent. So you mentioned bank sakhis. Banks have business correspondents, and so 90% of the business correspondents were male, only 10% were female, and 50% of the Jan Dhan accounts are owned by women. So there is clearly a gender gap there. So they just felt, I mean, not well treated by the business correspondents, saying these guys don't know finance, they don't know banking, account khul gaya, wapas jao, type of a thing. So what the study did, and we actually saw that if you increased the number of women business correspondents, you gave them training on relationship management, they were actually 3 times if more effective than the male counterparts in increasing the savings balance and loyalty rates. So many of these nudges, the fact that you can have an overdraft, the fact that do 5 small savings every 2 weeks, calling them aap aaye nahi branch mein, whatever, or even at the BC. I think in the 6 months short span led to dramatic increases in activity levels. So I would say very small, low cost nudges, just thinking about it differently. I think, yeah, we just opened a lot of accounts, but did not think of what it means in terms of, the face that we are showing to the women. So whether it is in the form of more business correspondence, a more welcome attitude, like just even a welcome message. The nudges being more positive rather than, much more instructional. So I'll
Great.
pause there.
Thanks, Geeta. In fact, so this is interesting because Prabhat, with Grameen, they work a lot with financial institutions in their financial inclusion journey. So Prabhat, would you like to share some on-ground experience, with us in this regard, but especially also since you also support them with your BC network?
So we as Grameen Foundation in India work with a number of BC networks, and you know that BC agents, which roughly we have around 3 million BC agents in the country today, are at the forefront of delivering financial services, financial inclusion to the masses. The 450 million Jan Dhan accounts that you have is largely serviced by these BC agents, as Geeta mentioned, that you have very small proportion of these as women. Whereas if you look at the usage of bank accounts by these customers, they feel much more comfortable when they are serviced by a female agent. But unfortunately, we don't have many female agents. So we worked on this project with the 6 BC networks: Drishti, CDOT, Integra, Sabke, Mann, Deshi, Chetna ji is here, on a few key objectives as to how we can make it more attractive for women to join BC networks as BC agent. And we also have our own small BC network. We call them Grameen Mitras. And there we found that in the rural areas, you have a fairly large segment of educated but unemployed women who are looking at employment opportunity outside the farm. So they don't want to work on the farm, but they're looking for a decent kind of work opportunity in the village itself. They don't want to migrate. But they face, so they have aspiration, they are qualified and they have aspiration. But the barriers that they face is, barriers from the household level. And there's a huge gender barrier in terms of their mobility, choice of what they can do, where they can go, and all of that. And the second is opportunity. There's not, many employment opportunity for them. So we really kind of, try to look at this problem, how we can address that. So we kind of worked with these BC networks on a whole change management strategy. That if you want to recruit, train, and retain more women agents, you have to work the entire system. So your human resources within the organization, right from the top, till your area manager and field officer level, everyone has to be gender sensitized so that they can go and have this gender dialogue at the household level, which addresses the barriers for the women to come forward and become BC agent. The second was for these BC agents, of course, to be better trained in terms of how you serve your customers, your communication skills, confidence, etc., and also making sure that they are interested in this work. And for that, you have to enhance their income. For that income enhancement, of course, besides training, we also looked at how we can diversify the product range that these BC agents can carry. So for example, bringing in things like assisted e-commerce kind of products to this BC network so that they can have that as an additional source of income. We worked with Mann Deshi Foundation, Chetna ji's organization, to develop a special kind of loan product for goats, and for a savings linked product. So women can save for a few months and then they become eligible to take a loan for buying a goat, which supports their livelihood activity, and it's an activity which is managed by women and controlled and owned by women. So all the aspects, not just financial inclusion, but also women's economic empowerment kind of gets checked off. So what it requires, in terms of experience that we saw, is if you have a concerted strategy and effort to drive that women's inclusion in the BC agent networks, as well as amongst having more women customers come and interact at the BC points, you have to have that concerted strategy. We have developed a whole framework around it. We call it I care. I care is intention. You establish intent that yes, we have to have more women in our BC network. Once that is established, then you work on building capacity. You then work on actions. And then you look at your results, review your results, and then you see how you kind of progress. So there are a lot of barriers to be addressed, but if you have a systematic approach to address these barriers, progress can be made. And we have seen more and more women coming forward and kind of trying to become women agents, as well as more and more women customers who are coming forward to kind of transact, which will address the dormancy problem that we often see in a lot of bank accounts. Last point I'll make, which is that financial inclusion has to go beyond savings. It has to go beyond payments and transactions. It has to really look at how people can use financial services to improve their lives. So you have to look at product design and entire channel design from the customer's perspective. What are the pain points of the customer? How you can improve his or her livelihood activity? And that's where a lot of new product innovations are possible. And of course, many people are doing it. I'm not saying that they're not doing it. Whether it's introduction of, say, insurance, or looking at use cases, look at farming community, you look at farmer produce organizations, you look at individual progression to individual lending from the group lending kind of mechanisms. So, but yeah, I mean, a lot of work is needed, but progress is possible. Thank you.
Great. So in the second round, I will actually ask you about the innovations you all have done in your own capacity. But before that, I would like to ask, Neha, you have a very interesting model, and in fact, Neha and Shweta, both of you are in so-called new age business models you have created specially for rural women or the rural consumers. So Neha, can you talk a bit about the whole microcredit segment, the gaps you saw, and how you are now how you move to P2P to, fill that gap?
As a way of introduction, before starting India P2P, my current organization, I used to run a clean cook stoves enterprise that made steel and aluminium clean burning stoves to replace mattika chulas, and we sold them all over the country. And we used to overlap quite a bit with rural women as distributors of the product and as consumers of the product, doing some kind of either consumer finance on the stove or distributor finance. And my observation, and I was running a business then, and I saw a lot of rural women running businesses, and they were very disciplined in payments. Just to give you a quick overview of the microcredit industry in India, it's about 70 to 80 million unique women borrowers, which is almost between 1/4 to 1/5 of all our households. It's a huge, huge industry. It's an industry that has the lowest NPAs. Microfinance levelized NPAs across the last 10 years would be under 2%, whereas corporate NPAs right now are about 11.7%. Home loan NPAs are also higher. So it's a very safe segment. And yet the borrower on the other end, in spite of great repayment behavior, pays 25, 26% regulated interest rate. The reason is they're small borrowers. The reason is that they don't have collateral. The reasons are also in the capital distribution journey because, banks give money to wholesale NBFCs further down. Capital takes a long journey to get to this very high credibility borrower or great asset class. So what, at least in my observation, I saw all venture capital funds, private equity funds were investing in the microfinance asset class. Microfinance companies were listing, becoming banks, just very successful, and yet we had two problems. One is that not enough capital. We still have a credit gap in this segment. We need to give more women more loans, more money, giving women the credit they deserve, which is not happening. And the second is the interest cost problem. It's very hard to grow your business if you're having to pay 26, 27% interest rate. You really need to be in some rock star business to actually grow your business at this interest cost. So what we do in about 2018 thereabouts, the Reserve Bank of India came out with new regulations on peer-to-peer lending, which basically enables anybody like you and me or even institutional investors to invest or lend money directly to anyone on the other side. In our case, in India P2P side, it is women entrepreneurs who have taken at least one loan before. Interestingly, every microcredit borrower has a credit bureau score. As on date, she has a CIBIL score, which is absolutely incredible, and yet we don't fund them enough, or we fund them at very high costs. So what we do is to source capital from the public at large or institutions, and source borrowers from the same asset class, women microfinance borrowers on the other side, and essentially match make and de-risk in between. This de-risking is done by diversifying your capital across geographies, income sources, etc., etc. And the primary intention for our business is to, giving women the credit they deserve, as I put it. So more capital at cheaper rates, while creating a great investment asset class for investors on the other side. I will stop now. I think I've
Thanks, Neha. So Shweta, you have been in the industry for over 18 years, and you talk a lot about, like reimagining, like the way of distribution, operations when it comes to the rural consumer segment. How are you looking at this entire new spectrum through ARTH?
So thank you, Sonal, and thanks to the organizers. Privileged to be with such experienced panel. I'll just start with a few of my own learnings over the last many years working in the segment. One specifically for women, what I have learned is that a large number of them, of course, are reluctant entrepreneurs. Because they are reluctant entrepreneurs, life is more tougher. And it's almost like the reluctant entrepreneur also happens to be a part-time entrepreneur. And what I mean by that is if I am an entrepreneur, I have to spend, let's say, 14 hours every day to run my business. But a woman who actually is running an enterprise, a social enterprise or a small enterprise in a rural area or a village or anywhere, has a family, has a house to run, has many other things, responsibility of the farm, and also has to do something to make additional livelihood. So she's literally a part-time entrepreneur. Productivity-wise, maybe 5 to 6 hours and more hours in everything else. So we are talking about that individual. Right? So one is, I think, that clear challenge that we have to appreciate that this entrepreneur is a different entrepreneur. She's not like a usual business owner. The second aspect is access to information, and I'm sort of building up to what Chetna ma'am was also saying and Geeta is saying, and in some context I'll come back to Prabhat's point. That I think women, the good news is I think the story has really moved. We've made a lot of progress. So I'm optimist that over the last so many years, there is a lot of progress. And when I say progress, like Chetna ma'am said, there are many women who understand that they can now talk about access to finance as an individual. This was a hard or a different concept many, many years back. The second thing is what we need and the kind of work that we are seeing needs to happen is a change in the servicing model for women, more than the product design itself. And what I mean by that is what Geeta was alluding to earlier is that, is there a nudge model? Is there a support model? Is there a systemic support model that understands the biases and the psyche of women who are trying to access finance? That's what we are also trying to reimagine and reprocess, to say that, hey, what should be your distribution strategy in those areas where women who are wanting to run social businesses, small businesses, how do you approach them? How do you underwrite them? What kind of data you need to collect? What kind of support you need to give them over the period of their loan? Or what kind of insurance, because they're good decision makers on insurance. They may not be the primary decision maker on investment, but definitely on insurance, they are a fairly strong decision maker because they know what kind of health situations are there in the house. So I think what's needed is a systematic intervention, a nudge, a support framework that allows for women to be serviced differently at scale. That's, I think, a challenge, and I think all of us in different ways and means are piloting, experimenting different models, which is nothing but a different distribution strategy. And Neha is, of course, executing a very beautiful model, which is a P2P framework going much deeper. What we are trying to do is identifying partners in communities, and when I say communities, I mean blocks or districts or much smaller units, where we onboard them as partners. And when I say partners, they're typically someone of influential women, a stronger women, a much more successful women retailer, a much more successful women distributor, who perhaps knows the other women in the network. And what we actually refer to them as what we call as hyperlocal partners, who are women specific, because their influence on getting reliable, credible data about other women in that network is much stronger. She has a good balance of social and economics both, which means she's not trying to be a DSA. She's actually trying to be a change agent. She knows the women retailers in the network, has a social dimension, has an influence, and has a balance on the economics and the commerce. So this is a big change that we are trying to drive as far as reimagining distribution, reimagining, how services can be better for women, for credit, for insurance, and of course payments. There is a lot of great work happening on the payment side. And the third aspect, which is something that we are trying to do, is I definitely slightly old school. I know capacity building is slightly overrated, but the most important fundamental of access to finance is capacity building. And capacity building can be called anything. It could be called digitization, it could be called upskilling, it could be called learning about taxation, it could be anything. But unless anybody in the space of access to finance is working literally on capacitating your customer, it would not go too far, is what my experience has been. So as ARTH, we are an MSME fintech. We work with nano and small businesses with gender focus. Capacity building is a strong pillar. And very quickly, last point, Sonal, I do hope policymakers, larger NBFCs, larger banks, literally review documentation which is called manuals and policy. And we were recently talking to some institutions, and they said that, hey, everything great, make sure that you take the Udyam Aadhaar from those customers. First they said PAN, then we said, okay, PAN's still okay, we will try that, and then say Udyam Aadhaar, and he said, okay, it starts with education first. You are far away from the ground reality. So I think the last work that needs to happen is policy, and not just at regulatory level, but literally bankers as well as larger NBFCs who want to enter the segment, very high potential serving segment, but they also need to reimagine that some changes need to happen if you want to cater to the segment in a more sincere and honest manner.
Thanks, Shweta. So now we have spoken a lot about what are the issues in hand, what is happening. So let's now talk about what is really happening on the ground, right? So, so Chetna ma'am, you spoke about alternative data, you spoke about creating a different asset base, right? So can you share through some of the examples, so what are some of the interesting innovations in financial services products that you have done in your organization to actually serve the customers, these rural women, better?
So let me bring, because you're saying financial service product, I was also thinking something else, because today morning we had ONDC and Postal, which I'll keep it very brief. But regarding the products, I'll tell you, how do we, like bank like Mandeshi or at Mandeshi Foundation, how do we design product? The first thing I feel that, which has worked very strong, is that whenever our customer is not happy, there has to be a place where they can say something, right? That I don't agree with what you are providing me and I want something else. And I would just narrate that we had one lady, Saraswati, she used to come regularly at the bank, and then she had a fixed deposit. That is the way she would always keep it. And then every month she would take the interest, and then she had done this on this term only, that she will get the monthly interest. And she would go back. And so I just asked her that every month you are doing it, so for what you are using it? And she said that I am now 65. I've raised all my sons, they are working somewhere. But even today for medicine, I need money. And so I have invested this money and I'm using for that. Which clearly indicated that she's talking about two things. One is pension and another is health insurance, right? And that was a lesson for us. And actually we started in 2009. That first we started the health savings, and then we started a pool of pension, because at that time things were not allowed. And then we directly went to Reserve Bank of India and we said there's no such pension product, and how would you, our women want it. And we did a partnership with UTI pension product at that time, and Atal Pension Yojana was not there. Now, when we designed this, there were so many things came up when we were discussing with our women. And then RBI was also, because Deputy Governor was going to inaugurate the product. So we had to explain women what is NAV, right? In that we say. And so our women were like very much prepared. And in making the story short, we launched the pension product, where the first question came at that time was that 500 rupees is the minimum SIP, which all the mutual funds, all the funds were asking, they are not affordable otherwise. So we had to bring down to 100 rupees. What Shweta you are talking, no, that's how it works, right? And then the mutual fund said we cannot do it with 100 rupees. In fact, our women said we cannot give you 100 rupees also at one time. So we had to work on both sides. On our women's side, we had to collect daily 3 rupees, 5 rupees, and on fund side, we had to say that, okay, monthly we'll give you 100. So we changed that. These are not like big policy, but you change your practices, right? And that's how this whole pension product was designed. And the first organization which came was Seva and Mandeshi. And then the Atal Pension Yojana was designed. So I little bit explained in detail that when you innovate in products, how does it happen and how does it affect the policy also. But yeah, you have to work at every level, number one. And I also, while designing that pension product, I realized regulators listen to you, but they like to listen the simple language. I also got that you have to take your women to them and tell them that, this will not work for us. If you want us, then we don't want zero balance account. We don't want these. So it is very important that how you take their voices directly to regulator instead of you doing mediating. If it works, that's great. So that is one. Now I'm talking about very briefly a latest innovation, and there are a lot of challenges with ONDC and Postal Department. Lot of our women, as Prabhat, you mentioned that we have to talk beyond financial inclusion. During COVID, everybody started e-commerce and all, and we also built, Mandeshi also built a e-commerce platform, and we couldn't do it. We were not that successful. How are you going to do aggregation? Photo, branding, packaging, everything you do. But aggregation and logistics on e-platform, it is impossible. Then we had this logistics Sakhi. She will collect the product and bring it at one place. Then we had a partnership with Postal Department, that you have offices, you have vehicles, why can't you do this? But this was done at a district level, and then we came, of course, we onboarded with ONDC. And on ONDC, our products are there. But how we are doing it is that the products are there on ONDC and Mandeshi e-commerce platform. Mandeshi is a seller app. Postal department is there for aggregating all the product. And for logistics, we have our logistics Sakhi. Now you can see how everything has worked. But you know what actually kicked up? What Neha mentioned, right? That you have a credit score of microcredit, but still we don't give individual loans, which I said earlier also. But from all this, one thing we got, and that was the data of the sale of that lady. And based on that, the lender can get the purchase guarantee, right? That if all these people are giving the purchase guarantee, then I give her a bigger loan. So I think we have to think now innovation not at my institution level, but I have to bring the innovation in whole ecosystem and then see that how I can empower the last mile population. So I'll stop there. Thank you.
Thanks, Chetna. Ma'am, Geeta, I would like to actually ask you because we know that, and you work a lot with, small, micro and nano entrepreneurs. And we also know that for women especially, running a business, there are a lot of concerns. The barriers are beyond money and credit, right? And there are a lot of social barriers as well. So, can you throw some light on, as a lot of private players, you also invest through grants. So how do we put this whole ecosystem together? Because providing just services probably is not enough.
So providing financial services, I would say, is maybe the easiest of the lot, and that is why, you'll see much higher concentration of credit access than of livelihood support. To be very candid, it's difficult to find large-scale models of livelihood. Okay. It's difficult to find large-scale models of livelihood linkages which work with women. Seva is one, Mann, Deshi, but the numbers come down very quickly. I do think technology today is playing a role in terms of being able to aggregate some of this supply. In fact, just yesterday we were having a discussion that you cannot have a large-scale handicraft sector. Handicraft artisans are meant to be small scale. There will be quality differences. There will be niche products. And as long as you create a market that is, on the other side also expecting niche products, then it works. And that's where technology aggregators are helping out. So yes, I think some of our organizations are also onboarding customers to or their partners to ONDC, etc. But I do want to go back to financial services for a bit. And to Chetna's point, I think microfinance is 99% women because we designed a product that met their needs. The moment you go from microfinance to nano, the percentage of women entrepreneurs falls to between 10 to 15%. You go one level higher, it's 5%. And that's because, again, it's a chicken and egg. There are not that many women entrepreneurs, therefore their representation in credit access is low. And our biases of evaluating these enterprises are trained on men-owned enterprises. So to some extent, so I do feel we need to break the cycle. On the one hand, we can create more women entrepreneurs through livelihood linkages, as you are talking about. But on the other, I feel, and it may be easier to actually enable higher flow of credit to the women-owned enterprises. And back to some of the policy things that Shweta mentioned, we've seen that in affordable housing finance. When a woman is even a secondary borrower, like a co-borrower, today in affordable housing finance companies, more than 80% of the loans are where women are co-borrowers, and more than 20% of women are the primary borrower, because we've created some incentives to do that. So similarly, just some incentives, nudges, concessions, even guarantee scheme supports. Because I just think our market and our algos are not trained to deal with women entrepreneurs and credit to them. So a lot of this policy support, yes, will require fiscal resources, government resources, but at the same time, it will have a multiple effect on the economy, right? I mean, today our labor force participation is low. So, I mean, I'm a firm believer, and I think there's a lot of literature today that if as an economy we need to make progress, the two levers we have are education and women empowerment. And financial services is a very key element of that. Um so, and I think we are seeing a lot of innovation in the financial services. One of our partners, Kaleidofin, is doing credit scoring using alternative data. And they are now offering it as a service and an underwriting to other partners. So you can scale up that product much faster than every NBFC trying to, or every bank trying to do that. So, I mean, we have another initiative which is supporting credit guarantees for nano entrepreneurs, led by the private sector. So similar to CGTMSE, but more focused on nano enterprises. So I do feel these risk sharing, risk scoring mechanisms, along with some policy nudges, can at least open up some of the credit gateways, and with that, the livelihood linkages will follow. It's very difficult to do livelihood and then credit. We'll remain small scale.
So Prabhat, do you want to take on from Geeta's comments, because you actually work a lot with the private sector, and give them these policy interventions or product interventions on from the customer centricity perspective. So can you share your on ground experience with respect to this?
Sure, thanks. And really, very, very inspiring, kind of examples from both Chetna ji and Geeta. So I think one key thing is, key word that always comes up is customer centricity. What is the customer wants, customer needs? And then you kind of see how I can address and meet that need. If you look at, I was mentioning this point earlier about, the need to move beyond financial inclusion, the need to kind of move beyond savings and credit, etc. And when we go to the customers and ask what kind of needs they have, what kind of challenges they face in their livelihoods, activities, etc., they come up with multiple needs, right? Somebody has to pay an electricity bill, and for that they have to forego one day's wage, go and stand in the queue at the electricity office just to pay that 200 or 500 rupees electricity bill. Now, if you can enable that to happen through utility bill payment at an agent network in the village, you have saved one day of wage, which is almost like 250, 300 rupees, and 50 rupees of bus fare. So that's how you have to solve for the problems that the customers face. In if you look at rural areas and rural livelihoods, how people save or create assets, they would never save in cash like in bank account. They would save in the form of buying a goat, buying rearing some chicken, maybe buying some utensils at the household. That's the kind of saving that they have. Financialization of savings is often a problem, because when you put money in the bank account, bank will pay you what, 3.5%, 4%, whereas the inflation is 8%, 9%, whatever. So it's a disincentive for people to save in a cash format. So then you give. Not only encourage saving, of course, we want to encourage and promote savings as a behavior, but then beyond, once you have saved some money, you give them investment options so that they don't lose out on that saving because of inflation. So then you bring products that can you save in the form of say buying gold units and digital gold. Can you do other asset-based kind of savings or investment? So investment is a major gap right now. Also, risk management is an important need for people. Managing health risks, managing other kind of risk, crop risk, etc. And the penetration of insurance is so low right now. But these kind of products, the moment you go into these slightly sophisticated product, that's where Shweta's point about nudges becomes very, very important. These are not automatic products that people understand. These are complex products. So somebody has to work on customer education. Customer education has to be key. And who will do that education? Unfortunately, the mobile, digital applications that you have can do the transaction, but are, quite bad at doing customer education. And also, education is not effective unless it is done by somebody that you trust. So that's where the role of intermediaries comes. So it's not just the product. Of course, you have to have a broader suite of products that the customers need, which solves their livelihood problems. And it is offered through a channel which is kind of, which understands how to do, customer engagement, which kind of builds trust, imparts knowledge and awareness, and is available to do the hand holding, is available to do the problem solving. So when you impart all of these things, combining education, building trust, building convenience, and a broader suite of more customer-centric products, that's when adoption happens. So these are kind of some critical aspects. Thank you.
Thanks, Prabhat. So Shweta, you spoke about partners, and I believe they are very critical to ARTH, right? And that is also something what Prabhat also just mentioned. So can you tell us, how are you leveraging this and, ensuring that all these rural customers, they get the cost of operations reduces and hence they get discounted credit. And even I believe that you also have products like microinsurance and working capital loans for these, customer base.
Yeah, so I think the first point on the partners, literally when we started thinking how we are going to solve this problem at scale, because one is you do it at a certain level, but then how will you actually scale? And we wanted to stay small as a company, as a fintech, without having a lot of infrastructure on ground. So we decided that the best way to do it was to identify, like I said, these hyperlocal partners. And these hyperlocal partners should come from various occupational or segments. Good example is FMCG, telecom, pharma, medical, equipment, etc., etc. And we have to identify these partners and try to make sure at least 30 to 40% if we are able to get women within that as a category. We are still working on it. We are not saying that all the 2,000 that we've been able to onboard are all women. But large number of them we are trying to see, can we bring more women on board? Because that is a catalyst for bringing the change at a field level. If you have those women in your ecosystem and they're on your platform, they are the ones who are able to actually identify, discover, give you better curated data, also help you in those nudges, can work as really an enterprise on your platform and earn and help the other women also earn in the process, both in terms of access to credit, also identifying insurance as a need. So for us, that's a fundamental model which we are trying to scale. And the beauty of that, it's completely built on variable. It's built on the motivation that you bring good business and of course good customers and support them in the entire life cycle, and you get incentivized for it. And I hope that we are able to sort of take this to a much larger scale, which becomes another alternate way of distributing products to women, especially financial products. The second product thing, innovation in a very small way, and there is a lot more great work that other companies have done, and we are in fact borrowing and learning from them. One of the small things that we did as ARTH, because we of course carry a big hat of impact and mission with us. So every customer that comes into the ARTH ecosystem gets mapped on to a government welfare scheme. It's like an auto mapping. So we've literally mapped on Uttar Pradesh state government scheme, Haryana state government scheme, Rajasthan state government scheme on our platform. So it's almost like you give any financial product, whether it's credit or insurance, the women also is getting mapped, auto mapped for a potential government welfare scheme. And this has been a huge lever of change for us. If there is a positive mapper, which means that yes, there is a profile which has come as positive for at least, let's say, 2 or 3 schemes. Then outside of the financial support that we've given to the women, we also then sort of talk to her to say that, hey, you're also eligible for these X, Y, and Z government schemes. We can help you get access to it. And then our foundation team and the impact team on ground works with them to actually facilitate that. It's a challenging process, but what it does is takes the concept of access to finance to another level. So this is the second thing, Sonal, which we have been able to do, and so far we are seeing great results. There's huge customer retention. In fact, I would say repeat rates in terms of the customers staying with you because they appreciate that you are doing a lot more than giving them just credit. And the third aspect that we are trying to do, which actually I've learned from Chetna ma'am only, which is developing champions in your own community. So we also have ARTH champions now. And I had visited her in Maswada when I had just come back from US. And I learned so many things from her. And so when I started setting up my business, this was one rule that I had in mind, that you have to build your own champions that have to come from your own communities and your own customers. So we have ARTH champions who are women who have been our customers, and they are across in all clusters. and the only work that they have is social motivation and social incentive to actually drive everything that we want to do. A new product launch, a new process that we want to drive, a new social benefit that we want to drive. So all of that goes through our Earth champions. They are smartphone savvy, they are vocal, they are free-spirited, they are influential, and they're much stronger than their male counterpart. So I think those are things that we are trying to do differently at ARTH and working in some ways, but we still have a long way to go.
Neha, so P2P is very interesting, and especially now you're catering to rural women through this very innovative model. So can you talk a bit more about this? How does this work? And lowering the cost of capital to this segment, which is still very high.
Peer-to-peer lending is a new regulation that was introduced by the RBI in 2018. So and I'll tell you what it replaces right now. Right now, you put your money in a bank account. Bank typically lends it onwards to a wholesale large NBFC. India has 9,500 NBFCs, of which only under 60 are A-rated and above, which means that they are the ones who kind of grab most of the capital market capital or bank capital. And they further lend it on to last mile lenders or institutions that manage BC networks. In fact, BC networks is one of the most amazing innovation in financial services over the last some years. And then capital goes to the borrower. Now, because you have so many capital distribution intermediaries in between, the cost of credit or the eventual interest rate that the borrower pays becomes very high. And also these are small borrowers. They're not borrowing 10 lakh rupees or a crore of rupees. They're borrowing 15,000, 50,000, those amounts. So the capital journey is long. So peer-to-peer platforms are in a way to shorten that journey, disintermediate that journey. You lend directly to a small rural businesswoman who is operating in another part of the country or a set of women, and you earn interest directly off what they pay, or they're actually our best capital growers, because of which currently investors on our platform earn upwards of 16% and borrowers pay lesser than the interest rate that even an HDFC microfinance loan or a larger banking institutions microfinance loan costs. So as in a sense, we are trying to establish that this is a great asset class. No asset class is risk-free ever. So this is not like putting your money in an FD for sure. But it's a great asset class with low defaults, and it can earn you a great predictable return on the other side while being a win-win scenario on the whole.
Thank you, Neha. So I see the time's up. Or do we have time for one last question?
My name is Astan Sharma. I'm farmer director from MSME, and I have worked in the rural area through Ministry of Rural Development, Government of India. I have visited more than 500 villages across the country. Now, there is a system available with the Ministry of Rural Development. If you go to the panchayat, some panchayat may have 10 villages, some panchayat may have 11 villages. So each panchayat, there is some training center. Each panchayat has small post office. Each panchayat has some bank also. All infrastructure is already there. And then Jan Dhan account, everything is already in position. So I think you have not tapped that resource, that skill which is there in the rural area, in the women, and you have straightway gone there. You are insistent for collateral. There is a Reserve Bank of India guideline that don't insist for any collateral, not from the rural women, even from the urban areas, up to 10 lakh rupees. And you are all not talking के collateral की बात आप कर रही थी, तो ये तो बिल्कुल this is contradictory what the government is saying. And what I assess that in the rural area, there is an intervention required for marketing their product. If you go to Shivpuri in Madhya Pradesh, they are making narrow jackets supplying all over the country. They are making ये अपना मूंगफली की या गुड़ में मिला, गुड़ बहुत होता है वहाँ पर, उसकी गजक बना रही है, सारी जगह जा रहा है. यूनिफॉर्म बच्चों की बना रही हैं और नैपकिन एंड यू नेम एनीथिंग दे आर मेकिंग इट. और उसका वहाँ पर स्किल के लिए, उनको स्किल अपग्रेडेशन के लिए भी सिस्टम है, ट्रेनिंग सेंटर है. तो काइंडली थ्रू योर एनजीओ उसको भी टैप करिए, रेप्लिकेट मत, डुप्लीकेट मत कीजिए. जहाँ खर्चा गवर्नमेंट का, स्टेट का हुआ है, आप वैल्यू एडिशन करिए कि उसके प्लस करिए. So this is my request to you is, और दूसरा ये जनधन अकाउंट के बारे में, which I say, simply by having a जनधन account, that does not make the woman empowerment. वहाँ वो डिफंक्ट अकाउंट है 4 साल से, बैंक के ऊपर बर्डन पड़ा हुआ है, एंड ओनली उसको कोई पेंशन मिलती है तो वो उसके डायरेक्ट अकाउंट में चली जाती है. MGR महात्मा गांधी नेशनल रूरल एम्प्लॉयमेंट में काम किया है तो वहाँ चला जाता है. तो मेरा इसमें मेरा आपका, क्योंकि आपने बड़ा अच्छी प्रेजेंटेशन की है, थोड़ा सा उसको एडिशन करिए ताकि वो ज़्यादा इकोनॉमिकली एम्पावर हो.
How do you compare the microfinance with the urban environment, where we see that that the big businesses, they are able to get subsidized interest rates, they are able to get finance at their own at their own terms, where the terms are extended and etc. But in the microfinance we find that where the cost of capital is very high, there is no customization, and even the data is not very transparent as far as where the finance is going and how the women are basically going to be deploying the funds, because the rural women basically have their own taste and own habits, so how do you especially how do you expand that into to the education sector, to the health sector, because simply paying the electricity bills and etc. is not the only definition of finance. So how do you basically see the expansion of this this kind of net, so there is a network effect, and basically this thing can be have some kind of much more beneficial impact for the economy. Thanks very much.
So if I have understood your question correctly, because I think there were a few points. So I think one is in terms of the cost of capital itself, which is the MFI versus the other side of the urban lending or the corporate side lending. I think Neha was anyways explaining this point earlier also, that because by the time this capital, which is let us say this capital reaching the priority sector or the MFI sector, many of the intermediaries or the institutions have already come in between, which increases the cost of on lending to that borrower. So one issue is that, and how do we actually navigate that to bring cost of capital down is a big thing. One of course is take a platform approach, create a new asset class where different types of investors are able to actually lend directly to such borrowers. But to do that, then there are two other questions, right? One question is, how do you actually assess which is perceived to be a high risk customer? It's perceived to be notionally to be high risk customer, while there's enough data, there's actually a very good borrower, always pays on time. It's a very reliable, trustworthy customer. But there is a perceived notion. Second is, how do you protect an investor if there is some mismatch that happens? So there are those credit guarantee programs, there are those sort of grants which are available to say that, okay, we will take care of certain amount of losses, etc. So that is also happening now, slowly and gradually. And I think the third aspect which you were pointing out was that how do we ensure that we create an ecosystem which goes beyond and we are able to get more data, more transactions, so that everything becomes like a network effect. I think it is a systemic approach. It's multiple stakeholders coming together, and like sir was pointing out earlier, very useful points you made, that sort of accessing the panchayat ecosystem, accessing the local trading ecosystem, the local FPO ecosystem is one thing, and then second is where women ecosystem exists, where they are trading that information, bringing the Bank Sakhi model into play, improving the accessibility of the Jandan accounts. So multiple things will have to happen, and it is happening. It's gradual, it's progressive. Mobile is going deeper, access to information is going deeper, so we will see more interventions happen. So I will only say that it is not a straightforward answer. The cost of capital is a big issue, and we are working towards solving that problem. But we hope this cost actually to the borrower eventually goes down. I hope that answers your question.
Microfinance borrowers.
Yeah, so the answer to both,
because these are they are not educated. How you pitch?
No. First of all, the microfinance borrower, because she has taken a few loans, she has typically taken 2 or 3 loans before India P2P lends to her, is a fairly savvy borrower. The second is, we are not wiping out the microfinance industry. So like all the other speakers here have said, you do need ground presence. Like sir was mentioning, you cannot have a completely digital product or digital intervention in this space. So we also rely on last mile small MFI operators or BC agents to onboard and diligence or at least physically verify these borrowers. What we are doing is we are disintermediating the larger capital distributors like distributor, retailer in any value chain to unlock more earnings for investors. But we are still relying on these last mile organizations जो मतलब पिछले कई साल से वहाँ branches चला रही हैं, हर महीने borrowers से मिलती हैं, and maintaining some of the social discipline that the microfinance sector has kind of perfected over the past 10-15 years. We are directly lending to these borrowers, but we physically meet each and every borrower. We verify their place of work. We go to their home also. And we don't do this with our own staff. We do this with kind of outsourced microfinance staff.
So that's two questions from you. So we are done here. Thanks a lot. That was a very interesting panel.